All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. Pretty stale day out there in the market overall. Just not a whole lot going on here. If I pull up the 1 hour chart of S&P futures, let me drag this down a little here. You can see S&P futures since Thursday of last week just going nowhere, right? There's a little bit of downside, in them here off their highs today. They're kind of sitting near their lows of the day, but you can see what that looks like in comparison to even what we saw Thursday and Friday. It is a very light day. The volumes are very light. It's the kind of day more reminiscent of what we saw Wednesday, Thursday, Friday, right back in here. Where just not a lot going on. Volume's very light. Market just kind of taking it easy. And we see that happening here today. And that's not uncommon. We see this happen during the summer months. We'll get some high volume moves, and then we'll get some just, everybody falls asleep essentially out there in the market. And that's kind of what it looks like we have here today. But, in the chat, I put up a list of some things that are worth noting about today's market. And one of those things is the performance of small caps. The IWM. The IWM is down about 1% here today with the S&P flat. That's a big differential. That is a huge differential. It is one that it's become big enough now that it's affecting the market vibe, and one that just can't feel good to the bulls to see small caps continuing to lag the way that they are. Now, you go and you look at China, you look at the emerging markets. You could kind of look at that and erase some of that small cap and go, well, yeah, I mean, the U.S. dollar is going down, so small caps are going to lag, and, emerging markets are going to outperform, and you could rationalize it away. But it is just kind of one of those warning factors out there. It's lag, it's underperformance. It's lagged here in June. Where the S&P has gone and hit new highs. The IWM has it not only gone and hit new highs from back here in August and September, it hasn't hit its May 2nd highs, right? So it's it's a point of concern here for the bulls, and very much should be. If you look at some of its components, the KRE, regional banks lagging, yes, that makes sense, right? Then you look at the IBB. Biotech, this one's lagging. And then we have a lot of transports in the small cap sector, which, to me accounts for the majority of the lagging. And you see transports lagging here. The recovery here in June has not been anywhere near what the sell-off in May was for the transport sector. So, and that's that pocket of weakness that continues to be. And if we go look at the new signals here for the challenge, we do have a new trigger here today, and it's FedEx. And FedEx is triggering bearish. Now, this is not a trigger that I can go and trade. FedEx has earnings here tomorrow, and, without 10,000 worth of gains, I'm not going to go and play earnings. I'll do it afterwards with a cut down dollar amount, but they have earnings after the bell here tomorrow, so I'm not going to go and play it. But it is a bearish trigger, here with the downside 3-7 cross action on it. UPS has a downside 3-7 but isn't triggering, but FedEx is triggering bearish here today. And the options, I looked at them and thought, okay, could I justify it a little bit? But the price on the options is pretty massive here with the earnings coming into them here this week. So that's FedEx. Again, transport, lagging. We've talked about FedEx a bunch this year. You know where I stand on FedEx. I think FedEx could be a stock that actually trades in the double digits again. And you say, well, that sounds absurd. Well, this was a $250 stock 9 months ago. It's now 160. The way FedEx has historically traded, to make big moves like this is not unusual for it to do. And it is still, you look at where FedEx is relative to, the lows of the, financial crisis. I mean, FedEx is still up big. I mean, 400%. It is still up very big. But, there's some structural issues going on here with FedEx, some changes that continue to happen. Oh yeah, and let's not even mention the economy, right? Which when you look at FedEx, it's much more economically sensitive than many other companies that are out there. Its book value is somewhere around $75 a share, so I don't think it would spend a lot of time sub 100. But I think if there's a really nasty report here with some lowering of guidance and where the PE ratio bumps up to somewhere around 16 to 18, I would not be surprised to see them sell it off down to that degree. The dividend's not big enough to protect it. It's at about a 1.5% dividend right now, and so it's just not there. Now, what's going to get really interesting is if they do start to sink down into this $100, $110, even $120 level, their market cap starts to become small enough that they become a little bit of a buyout potential out there, which could get very interesting. But again, I'm not going to play it here on the earnings. Here with FedEx, not going to take that risk until we have more than 10,000 in gains here for the challenge, and for the challenge we have 8,500 in gains. So we're just a little shy there of that. So hopefully we'll be up over that 10,000 mark as we hit into the heart of earnings season and able to play a few of the earnings that are out there. Now, as far as downside 3-7 crosses here today, there's a lot of them on the watch list where the 3-day moving average is moving down below the 7-day moving average. I mean, you take a look at Under Armour, has that action, right? Now, in the case of a lot of stocks, Under Armour included, it's not bearish action. It's more consolidation action or, hey, a little bit of pullback action. But it's not triggering for the challenge because the probability of moving down to average true ranges, it just isn't there, right? It's not, oh, well, what's the probability of the stock going down tomorrow? That is not what the algorithm's about. It is about the probability of moving to average true ranges from where it is now. And with most of these stocks that have the downside 3-7 crossover, the probability is pretty low. Bristol Myers, the probability is pretty low. Chipotle, Mexican Grill, has the downside 3-7 crossover. But it may go down. It may fall. It may push on back. I'd love to see Chipotle pull on back a little bit. But a lot of these stocks, this is kind of what they need before giving a new upside signal, in some of the upward trends. So we're not seeing it. We're not seeing them, turn into, big bad bearish signals to trade. FedEx is the one exception. I thought Juniper might trigger here. In fact, I was kind of surprised it didn't. But the consolidation risk element is very high on Juniper, a lot higher than I thought it would be just by eyeballing it. Twilio has the downside 3-7 action here on it. You'll notice, though, Twilio trading near the upper side of its range. Very difficult to trigger when that happens. And then I thought for a bit we'd see Walgreens trigger bearish. And it's not like I could trade this one either, as they have earnings upcoming. But I thought they might trigger, but it's actually trading near the high side of its range over the last 2 months, which is, a sad commentary for them, especially when you think of how far Walgreens has fallen. I mean, it is fallen heavy here, but anyway, those are some of the downside 3-7 crossovers that are out there in the market here today. But when we go and we look at some of the market internals like new highs versus new lows, we're not seeing any real change here. We go look at something like the bullish percent index. We're not seeing any major change here. In fact, bullish percent index continuing to go on up. So the market internals are holding firm and firmly bullish. But as I mentioned earlier, the lag on the small caps is pretty noteworthy. Is pretty intense, and it's going to be one of those things that, hey, if we see the market fall from here, market technicians will point and they'll go, yeah, see the small caps, they predicted it would happen, right? Even though many of the other metrics aren't. And if the market goes up from here, they'll point to the other metrics. So when we take them on aggregate, look at them all, the metrics are still firmly in the bullish camp, and not a whole lot of sign of that changing here, at least yet, on the day or on the week. And as I mentioned this morning, I kind of expect first couple days here this week to be fairly quiet. And I think today is about as quiet of a day market-wise as we've had in a while. And it's one where I don't think that's going to continue. In fact, I'm pretty confident that won't continue. But for now, that's where it sits. Okay. So the challenge is going to go into the close here again with cash. You know me. I don't like that. I hate going into the close with cash. But at the same time, it's one of those where, okay, the triggers happen, we run with them and go, and they don't happen. We wait and wait for the triggers to come in strong and run with them. Thanks for hopping on. Thanks for being with us here at Trader Minute. Have yourself a fantastic evening. We'll talk to you tomorrow morning. Take care.